So when we are talking about a candlestick, there these things tse di na leng mebala e sa tshwaneng, mo gongwe go orange, mo gongwe go sweu. So the difference between the two ke gore e nngwe e supa gore market wa go godimo, e nngwe e supa gore market o ya kwa tlase. Akere. So ke sa diege, let me change the time frame le gale e siame. Our main focus is more candlesticking, I guess. So when we are talking about a candlestick, as you can see here, had each one and so tiger, had each one and so Jimmy who there's actually right. So the difference between all these is their size, the mebala le the long week. Mebala e determine ke gore e butse ha kae e be ya go tswala ha kae, right? So for example, if we have a candlestick in Sinjana, a candlestick and then we have our second candlestick here again. So how do you level the candlestick is around? Wa gona go bona gore e go godimo e butse ha godimo ha a boeta go tswala kwa tlase ha, and then e latelang e tswa go bula ha godimonyana, or let me make it simple jana e latelang e tswa go bula ha godimo e be tswala kwa tlase, right? So when a candlestick closes, another one opens. So when it opens, it's going to open in Sejana. It's going to open in Sejana. And then if it goes up when it opens and then it goes down like this, it's going to leave our long week in Sejana. Yes. So yeah, our long weekends in Jana. So a long week is like a footprint. Where did you go before going day? Again. So if it decides to open a one thing, a long weekends in Jana. Again. You'd find hore eka ja. Let me try to clear. Okay. So ha candlestick yaron entse jana. Ha candlestick yaron entse jana. Okay. So this is where it opened, and then this is where it closed. What I say again. So the difference between these 2 points, this one is the previous price, the last price say and then this was our opening price right here, and then this is our closing price. So when we are talking about a candlestick, we are talking about something like this. When you are looking at it, it's the opening, and then quarters is the closing. If it's bearish, if it was bullish, quarters is the opening, and then godimo is the closing, right? So the difference between the candlestick it determine wa ke re butse quarters e be tswalela godimo kana e buletse godimo e be ya go tswalela quarters. That's the only difference, right? So in this case, how do you use a candlestick price you have to look at the amount of movement. The amount of movement, I mean, like from up to down, how much did it move, right? So how much did it move? if it moved a lot, it is very strong, and if it moved less, it moved whole sky. I get it. So when we have a candlestick like this one, this is called the body. This here is the body. This whole part here is the body, and then this one it's called a wick. It's called a wick. Yes. So that's a candlestick here. It's the wick and the body. The wick determines the history of the candlestick's movement or its previous movement before closing yes, before closing or before current price. And it's still open. This is current price here. This current price and then Kodimomo is the previous price, right? So between the two, you can see the Horeyemwe is like the past, and then Yemwe is like the future. The other one is where we are coming from, and the other one is where we are going, right? So there are patterns. There are actually patterns. We determine. We determine. Oh, sorry. Okay. So back to the chart. Let me clear this. Let me clear this. So if we have a candlestick here, let's say it's bullish, right? And then the next candlestick here, so price no longer wants to go up, but now price wants to go down, right? So our price it strongly recommends a sell because the selling candlestick is bigger than the buying candlestick, or the bearish candlestick is bigger than the bullish candlestick. So higher it's bullish, higher it's bearish, just like the trend, right? So going back to the chart, to keep it simple, let me do this. So orange is bearish again, and then white is bullish. Sorry, is bullish like that. Is bullish. Yeah, done. So now we know the difference mo charting again. So what I was saying, mo charting, if we have a candlestick, there's one candlestick, orange. It was selling Helasinte, and then it left a long weak rejection. But he's above opening price. Then the next candlestick yarona, the next candlestick yarona entse jana. So when you determine the sizes, you look at the body, not the long wick. The long wick is short. So determining the body between those two candlesticks, you can see the bullish one is bigger than the bearish one, or the white one is bigger than the orange one, right? So price is expecting to push higher. You are preparing to buy, right? You are preparing to buy. So you enter your buy bullish engulfing. So engulfing candlestick, the current candlestick or the next candlestick is bigger than the previous candlestick, right? So that's the difference between a bearish engulfing and the bullish engulfing. So high bearish, it's and then bullish, it's a bullish engulfing, right? And then we have our price here. Our price decided to buy here, and then as it was buying, this other candlestick here. This candlestick ya bearish here, but the next candlestick ile ya engulf our bullish candlestick ile natona mo go yone mo gore lang gore price is expected to push down as it's pushing down jana. Or another example, we have a bullish candlestick here. This is our bullish candlestick, as small as it is, and then we have the next candlestick ele bearish away hetaka size price is still going to go down, right? So even if at current price this is a bullish candlestick, if this current candlestick decides gore ya go tswala ko tase e tswalela ko tase gore price would still continue going down again. So that's a bullish engulfing and bearish engulfing, right? So let me draw them here. Let me draw them here so that you can see them. So the first one is bearish engulfing, and then the next one is bullish engulfing, right? Yeah, okay. Yeah, I'll make them look a bit different so that you can see. No. Let me do this for my current chart. I get. Okay, so as I was saying here, I will mark my bullish candlesticks coordinate white, and then my bearish candlesticks coordinate orange as in the chart. I get. Okay, like that. So that's a bearish engulfing. This one here it's a bearish engulfing, and then the next one is a bullish engulfing, right? Yeah. Okay. So this one here, bearish, price price is still to go down, right? And then this one price is still to go up. It's bullish, like that. It's bullish, like that. I get. So that's the difference between bearish engulfing and bullish engulfing. You spot it on a higher time frame about an entry risk management, and then you make simple money. Simple as that, right? And then going back to the chart, we have a doji. So a doji is a candlestick. It has a small body. Sometimes it doesn't even have a body, but it has a long wick on one side, right? Example, like this, and then our long wiki, our in Najana, Kana, this, yes, like this, and then our long week in Natelele, again. So that's a doji, a super rejection in price. Sometimes you'd find that motakayo umutonanyana like that, or maybe sometimes tota, right? So that's a doji like that. You see it, expect price to reverse, But how do you confirm if price is really going to reverse? In this case, bullish here. What you want to see more pricing happen or more the candlestick in Zaho. You want to see a bullish candlestick push it up Jana. You want to see a bullish candlestick push it up Jana. A bullish candlestick opening below and closing above the previous candlestick. Right. Ekana bullish engulfing, but kaki candlestick ye kota se the doji. So the doji rang price will continue to reverse. So usually price reverses, even if the body is not that big, as long as it closed above. As long as it closed above, I mean, below more bearish and then above more bullish. I get, yeah, like that. Let me change here. Right, so we are going to spot them on our chart. For example, here we have this one. We have this one here. It's bullish right here. I get the next candlestick latelang ile ya tswala go godimo ga yone ile bullish jana. Ile bullish jana. I get, so that's confirmation that price will go up. That's confirmation for the price will go up. I get, and then on the bearish side, we have it here. Oh, yes, we have it here. But the difference, it's also called a pin bar. It's also, some people call it a pin bar, but now I just like to address any candlestick with a wick hitting the body, or the wicks that hit the body as a doji for simple terms. Some call it a hammer, some a pin bar, some there are many names. There are many names to thought. But candlestick. So here we have one here, a bearish, followed by a bearish candlestick like this. So if you want to trade candlesticks, you have to be a very, very, very good scalper, right? You have to be very fast at opening positions and fast at closing those positions, right? Something like that, right? And then we can have it in Sejana. We can have it in Sejana here. When you look carefully at this one here, you can see it's long week. I get. Now, how do you use this? Price is rejecting, but that's not the case. The case is price is not rejecting candlestick just a little bit, but most of the time it was pushing up. Its history is bullish, right? Even when it closed really bullish. There's a lot of bullish momentum, right? There's a lot of bullish momentum. Then the next candlestick opened bullish and then continued bullish like that. It's another confirmation we are still going up, right? And then we have the evening star. We have the evening star. Okay, so the evening star is something like this. Let me edit on this one. Like this, Jana. And then you find maybe a long week on the candlestick. You'd find a candlestick like that. So Jana, we call it a evening star. It's an evening star like that. Again. And then, oh sorry. And then a morning star, it's a kotas. akere letsatsi phakela le tswa ko tlase le ya ko godimo, and then maitseboa le tswa ko godimo le ya ko tlase. So evening ke ko godimo and then morning ke ko tlase. Akere ga nke gore letsatsi le tswa kae. It's just the name for easier use. Motho o mongwe ta ba re morning star ko godimo, morning star ko tlase. So ha ntse yalo ha itse ra tsene ba e kana sele, right? So even here, the candlestick usually has a long wick here. So even if it doesn't have a long wick like this, it doesn't mean it's not valid. As long as there are two bearish candlesticks and then a big candlestick like this, like that. So it's more like a bullish engulfing. This one is a three-way pattern. A morning star, evening star, and a doji, or a pin bar or a hammer, it is reversal candlesticks, right? It is reversal candlesticks. The market is about to reverse. Ham market udirayana over orange. I'm about to go up. From here, I'm going up. I'm no longer going down, I'm going up like that. Or I'm going down like that, right? So that's how they work in simple terms. It's nothing hard. They're also there on social media, especially on TikTok. You can watch the very, very short reels, and then someone will be explaining really fast, and then you can learn very fast, and then you can go on your chart, you relate, and then you get on from there, right? So going back more charting now, we have our pattern here. You see this candlestick here? This is a doji candlestick. If you are not sure what's an over is consolidator, you can use the previous candlestick. The previous candlestick is super ring. Price it was pushing up, bullish engulfing. I get a bullish candlestick, and then a bearish candlestick bigger than the previous candlestick. Right. Price is retesting this zone. I want to retest the one. Price is rejecting, it's going down. Right. So even here, you can see price was pushing down very strong. This is price pushing down. And then all of a sudden, enter a doji the next bullish candlestick. Or you can enter hadoji itswala, or you can enter when the next bullish candlestick itswala. Situation in situation you can buy. You are going to buy from there, right? So that's how candlesticks work. They work in patterns. But to confirm it, you need it to be inside a pattern, right? So you see a doji. A good example is here. Don't be manipulated. You see a doji like this. This is a doji. That's why it's a confirmation. So here you can see this doji opened went bullish for a while and then it closed bearish. The next candlestick was bullish. You were supposed to wait for the next candlestick to close bearish, right? If it closed bearish, you are sure that price is reversing and then price would go back down, right? And then here you would have been manipulated in right? So what you do, you wait for the next candlestick or confirm. For example, here you see a doji here, you wait for the next candlestick or inside a momentum we can go down, or even here, for example, or even this one here, this would be a momentum or what us. I got, and then here we have a bearish engulfing here. This is a bearish engulfing here. This is a bullish candlestick followed by a massive bearish candlestick. It's a bearish engulfing, and then going a little bit higher. we have a doji here. We have a doji here. So this doji here, if it closed a bullish. So you have to wait for the next candlestick to also close a bullish. No, had you bought here, you would have lost a lot of money. Candlestick previous again. And then going a bit higher, we have an evening star. An evening star 90. So our evening star in Tejana is a bullish candlestick, it's a page, followed by a massive bearish candlestick, showing us price will be going down. Right. So had this candlestick in the bullish, no price without any change. And then here on this candlestick, it's a page. This candlestick is a page. We have a bullish engulfing, or we can say it's a morning star. Reject to a evening star. Looking at 3 of these candlesticks, right? And then we have this movement there. We have this movement here. So I'm not going to differentiate between the candlestick. I'm just going to draw them because so this candlestick, see, you'd find them within Sejana most of the time. You'd find them within Sejana most of the time. Okay. So you'd find this bearish candlesticks, so this candlesticks, how we are going down. Multiple candlesticks usually and then if you sell on the third candlestick here, the movement that is expected here, the movement that is expected here is nothing less than a massive candlestick in Sinjana, more like a jump, like that. Yeah, there, something like that. So you'd be expecting your price for a movement on Sinjana. And then on the chart or on the lower time frame, you'd find a movement your movement was moving like this, consolidating, but in a modern trending, right? Yeah. Yes, like that. And then all of a sudden, here, price, price ya consolidate there, but I was expecting for an right? So everyone who is going to buy, expecting price to take out this high is very wrong. What price would do, and then it would dip very, very strong. That's how this movement works, right? Then after the movement, it's going to give you a couple more candlesticks. Yeah, a couple more candlesticks. It's in Jana. Something like this. Something like this. And then all of a sudden, it's going to give you a bullish engulfing. When it gives you a bullish engulfing, price so what would price do? It would go back up. So you see the space between let me remove this. The space between your candlesticks, this candlesticky A and this candlesticky A, it's called a fair value gap. So this space has to be filled before price can go down, right? So while they bought risk management, price etabo ever boiler, so that they can close their buy positions and then they can sell. But now the difference, not everyone is smart enough to understand what a price is not going to buy, but it's only coming back to add more buyers. Or everyone who was selling is becoming a buyer. Everyone who was buying is adding more positions. Everyone who hasn't taken an entry, is now starting to buy. So price would leave a long wick like this, usually. Yeah. Okay, I can get it. I'll just adjust my candlestick jana. Let that hello. Yes, it would leave a movement once in jar. And then now price will change. I get it was buying here. Price would just go down massively. It would just go down. So your main focus price was consolidating element trending. So I'm going to show it more charting here. Okay, here, more charting. So if you look carefully on our chart, this is the consolidation I was talking about here. It's consolidating in an uptrend. I will enter a massive buying movement, and then I will able go boeng ga yone it will boela kwa tlase, then ha e boela kwa tlase it's going to continue to buy, right? Now the difference is that once it consolidates with bullish and bearish candlesticks, this validator, it can go against itself. What I'm trying to say, if it does this, if it's consolidating on an uptrend jana, it's consolidating on an uptrend jana, right? So there are a lot of confluences, but today's topic was just candlesticks. We are focusing on candlesticks. I don't know if I can get this movement on a lower time frame. I don't think it will be possible. Hey, but anyways, when you look at the movement here, or even here, let me just show the movement here. So when you look at that movement more lower time framing, there is a consolidation on the last candlestick. A super price in a manipulator or a consolidator, then all of a sudden it gives a strong movement, and then it does the same thing again for now, and then it gives a strong movement going down. All right. So you see two massive candlesticks, you enter, you enter, and then you wait to see where will it close. You add your positions, and then you wait for the next candlestick. Right. Then that's how, if you focus on then how would you more? Are my candlesticks supposed to be bearish? So this one bearish, and so does this one, and so does this one, and this one, and this one, and this one. Leone. And then once it's all bullish, what I say once it's all bullish, you close your positions, all of them. What it's all you take your profit. That's why you see most of us, we leverage rubber leverage candlestick. I just add multiple positions to go Jim Gabakuda, and then it's all like a bearish is it going to close bearish or not? And then it pushes down Gabakuda, and so on and so forth. And that's how I managed to take clean sales like this ones, or a clean buy like this one. So you apply the same strategy here. You add your positions. Once candlestick change color, you close your positions, all of them. So if it changes color, expect price to start consolidating. Right. Expect price to start consolidating or start reversing. Right. So like here, if you took your sales here, you took your sales candlestick here, you sold, and then candlestick change in a malo sale, like here, it starts becoming bullish. You close your positions. You wait for the same pattern again. Once you see that pattern, you go in again. So how's in a pattern? If price is not making this 3 candlesticks steady bullish, forget about price moving directional. So usually I did three bullish candlesticks, 1, 2, 3. Expect multiple more. Even here, 1, 2, 3, and then multiple candlesticks, they are going. But now the problem is when it gives just one hela, opposing candlestick, it's doing. That's it. It's not going to move the momentum, it's going to consolidate. Right, as you can see here, once a bearish here, consolidation started and then reversal took over. Right, even here, a sell, a sell, a sell, and then a bullish, everything changes, price a while up. Right, so even here, price 1, 2, 3, and then 4, 5. Once a bearish candlestick, everything changes. All right, so when you enter a positions, candlestick opposing your whole direction, close that position and wait. You close that position and then you wait. Right, so candlestick high change e go direla mathata ya la sa reng a mathata sa hele. Right, as you can see, even here price was just buying ka di bullish candlestick ya la the bullish candlestick, and then all of a sudden there's an appearance of a bearish candlestick ke yona e le gore e senya sengwe le sengwe. Right, so that's it for today. I will see you tomorrow. So we will meet again tomorrow. So once we meet tomorrow, candlestick, but focusing more on the weak rejection, but highs and lows. It's a break of structure, change of character, but highs and lows. So that's it for today. I'll see you on the other side.